Hey everyone, Patrick Jackson with Mann Mortgage here with this week's market update. Today is Thursday, September 29th, and it's about 11:30 on the West Coast. Since we last talked, rates continue to be on an upward trend, more of a roller coaster the last couple days. Last Thursday, I believe the average conventional rate across the country was about 6.62%. By Tuesday morning, we had spiked all the way up to 7.08 due to some issues over in England that were having a big effect on the markets. And then we had a nice little rally for a couple days and got a little bit lower. And then, of course, we can't have too much of a nice thing. So today it started off a little negative, and I believe we're sitting at about 6.82% according to that lender survey with the average conventional rate. It was a busy week in housing news. We got GDP numbers came in negative again, which again is an indication of recession. We got appreciation numbers, which came down a little bit, but it looks like it's mainly in big cities. And year over year, that's still really good. We got new home sales, which non-existing homes, so basically new builds, and those came in way higher than expected. It was expected to be negative. They came in about plus 27%, which shows that really no one was moving out of existing homes, so the only option for home buyers was new construction. And then we got existing home sales yesterday, and those came in a little bit negative, but not about negative 2%, but that was in line with expectations. Considering, again, with elevated rates, you have people sitting on 3% mortgage rates that don't want to move out of their home. So that's going to hurt the supply on that side. So again, and then tomorrow we get PCE numbers, which is the Fed's favorite form of inflation. Especially they like the core PCE numbers, which means you're taking out food and energy. The reason they love the core numbers so much is because that's what they feel like they can affect with their policy. A war happens in Ukraine, energy and food prices go up. That's not in their control. But rather than their Fed rate, they can cause some issues and try to bring home prices down and so forth. And let me I want to share this with you guys. So this is the CPI, which we got a couple weeks ago, which caused all these issues, the core. And so this is going forward. Like I said, really, what the Fed's trying to do right now by raising their Fed rate, they believe, basically that house prices got too expensive in the United States, and they want to kill demand and bring prices down. And the way they're killing demand is by raising rates and making my mortgage rates higher and making people not want to buy. So like a lot of things, they probably got that half right. They're definitely killing demand. We all see that, whether you're a borrower, an agent, a lender, we all see that demand has gone down. The problem is that they think that's also going to help supply. And where they err in their thinking, in my opinion here, is, and in a lot of people's opinions, is that, again, people have a 3% rate. They don't want to move and get a 7% rate. So that current homeowner is not vacating that house to get a different one to make it available for someone else. So that's not going to help supply. And the second part of it is builders. You make the cost to build more and more and more expensive, and you make it so people are not as interested in buying homes. Then builders might stop, or probably in certain parts of the country have already stopped or put pauses on different building projects. So if you're not building new homes, that's going to affect supply. So again, it seems like they get about half of it right. They're killing demand, but they're also in some way they're not helping supply, and maybe they're going to even hurt it in some ways. So we'll have to keep an eye on that. But going into this, when will inflation peak, and therefore when will we maybe see rates come down and make it a little bit more palatable for folks? So just another explanation is that just once again that the year-over-year inflation numbers you're always replacing last year's number per month. So September of 2021 is going to be replaced by September of 2022's numbers, and it's a year-over-year rolling average or rolling number. So as you can see, this last summer, the 2021 numbers were really low. So when inflation numbers come out for those months, there's a good chance that number is going to be above what it was, and it's going to be bad for us. It's going to be bad for rates. But once we get past September and we hit October, as you can see, we have higher inflation numbers. So when those inflation reports come out for those months, those numbers are going to look good by comparison, and the overall year-over-year inflation number should come down, and that should have like I said, a positive effect on interest rates and mortgage rates, which would be awesome to see those come down. We're not going to come down to threes again or fours probably anytime soon, but even getting down in the low fives, mid fives. Based on surveys, talking to current homeowners, that seems to be the number, that people are willing to give up their really low rate and they're okay with. If you get above 5, you get into the 6s, current homeowners don't want anything to do with that. So That's really all I had for you guys this week, with everything going on. And we definitely want to keep an eye on the market. You definitely want to keep tabs on any clients that are, in the process right now to make sure that they still qualify. Make sure your buyers aren't falling out of qualification with their lenders if their lenders are dropping the ball. And just making sure everybody's informed so they can make good decisions. There's going to be, options is obviously not good for rates to go up, but there's different ways for borrowers to deal with it. And there's always going to be options. And hopefully, all the lenders you guys are dealing with out there are giving people options. If you need anything at all, please let me know. Otherwise, I hope you guys have a great week, and we'll talk to you soon. And hopefully when I talk to you guys next time, rates are a little bit better. Talk to you guys soon. Bye-bye.